Technology is 29% of my benchmark, so of course I have to have more of a tilt on technology. But if you add up materials, industrials, some discretionary, some financials, that can get closer to 20% of my benchmark. So naturally, you have to make bets. And I'm making a bigger bet, at least on the industrial side, because I think that's where you're going to see operating leverage versus, say, financials, where I'm being more specific, stock specific. But no, I mean, I think I've cited many different times the total addressable markets and how exciting it is. Internet of Things, $1 trillion by the end of the decade. SaaS cloud, $1 trillion by the end of the decade. Wearables, $55 billion by the next 2 years. There are all kinds of total addressable market numbers. I didn't even talk about AI, which is also going to be $1 trillion by the mid 2025. So I can make a case to own these names, but I don't want to be all in tech. I do want to have diversification, and I have made money, by the way, a lot of money in some of these industrials and in some of these cyclicals. You just have to have balance.
Degas, Microsoft today, target goes to 250 from 230 at RBC. That's a stock you own. Positive calls today on Qualcomm and Micron and Tesla as well. You could take any one of those. The point being that the street keeps upping price targets right down the list.
Yeah, and I'm going to piggyback off what Stephanie just talked about. I think and Scott, you mentioned this too, when you talked about value, the old definition of value says, well, utility stocks are value, technology stocks are growth. I think that's the wrong way of looking at value. You have to look at value from a vantage point of within sector. Also, if you really start talking about looking at book to market. Book to market is a measure of old economy, factories, plant, and equipment. As Stephanie just brought out, is that if you look at technology, for instance, let's look at a valuation measure that really does a better job in technology, and that's operating cash flow yield. And that's a measure of how much cash is generated relative to the market value. If you look at Apple or Microsoft, if you look at Apple has a operating cash flow yield of 9.1%. And that is actually a value premium in the technology sector. Microsoft has a operating cash flow yield of 8.1%. Once again, that's a value premium. So when I look at Microsoft, when I look at Apple, I see value premiums. In other words, you can buy these stocks. The stocks are actually priced as it relates to the value within the technology sector. These are buys at this level.
Okay.